Hey guys, for those of you who are looking to buy your first house, but your credit score is not just there yet, what are you going to do? Most people continue to rent, some people consider rent to own. I have another solution for you. Today with me is Angelo Christian. He is the owner of Angelo Christian Financial, and he's going to tell us more about FHA loan program that he developed for lower credit score borrowers. Angelo, before we go, let me just say that Angelo Christian, his contact information is on the screen right now. It's going to be in the description below as well. So let's just go ahead and jump to the topic. Can you tell me about your program?
Yeah. So, just a real quick, we are a direct lender, and we offer, traditional, government and banking loans. We also have a private money sector. We do private money loans.
Mm-hmm.
And basically with that, it's more creative, outside of the box type thinking. For example, with
Creative financing, which is what I specialize. Mm-hmm.
yes, creative financing. And I'll tell you some examples to share with you some deals that I just recently funded, because I believe that stories and testimony are the most important thing. But for instance, FHA, they don't actually have, the government doesn't have a credit score requirement.
Now, that was a big shock for me to find out. I thought that the government did have a requirement, but go on.
Yeah, you can go research. So you as a realtor, or you guys listening as a consumer, can actually go straight to the government guidelines for FHA or VA, and you'll see there is no credit score requirement for these loans. It's up to the lender to decide what score they want to lend down to. So why am I telling this? So for example, we can offer programs for borrowers with FHA or even VA with a 550 plus credit score. Okay, so we can legitimately, you still get a government backed loan, low interest rate product. Now, with the FHA, there are some different qualifications for this FICO. I will tell you, we also do in-house free credit boosting for our clients. So for example, let's say you have a 550 credit score or a 580 credit score, and we see a potential opportunity to get your score to 620. If we can get your score to 620, we want to do that because you're going to get better terms. So the thing is that even if you have a 550, we're going to try to still get your credit score up because we want to get you a better loan. And the reason why, for example, let's say on a 550 credit score, the FHA approves the loan, but the interest rate's 4%.
Right.
If I get your credit score,
so you will qualify, just to translate it for you guys, if your credit score, if your interest rate is 4%, you will qualify for a smaller amount of monthly payment that you can pull.
Right. And then the other thing is that your payment's obviously going to be higher. So what we're going to try to do is get your score to 620, so you can get like a 3.2 interest rate,
which will allow you to buy a bigger house.
Buy a bigger house, which is, and especially in DFW, the houses, the cost of housing has, gone up, for the last 15 years. So, so the thing is that, what I'm trying to tell you guys is that even if another lender told you you were denied, that the government requires 640 or 660, it's not true. The government doesn't have any credit score requirements, and we'll go down to a 550 or 580, to make a loan for FHA loans. And we also do, we have a whole bunch of other products that we offer. Like we do self-employed, no tax return loan, no documentation loan.
No tax return, so no doc. Basically, you're doing the bank statements, right?
Bank statement. There's also something called the true no doc, where they show no W-2, no tax return, and they only show us proof of funds, just the money for the down payment. And
but they still need to have a 550 plus, right?
On that particular, so it goes a little bit deeper. So the true no doc, there's a few different options. There's a no doc with Prime, which requires a 650 or plus higher credit score, and you get a low.
Okay, but no docs, right? So you didn't file your tax returns. We're still in business.
Yeah, let's say that the guy wants to. Let's give you an example. I have to give you an example so you can see. So the customer, I did one in Dallas like a week ago. He has 750 credit. He wants to put 30% down, but he's unemployed. Okay, he lost the job from COVID. So, but he can put the 30% down. So we approve him, give him a 4% 30-year fixed loan. So
and he can refinance later if he
can refinance. But he bought the house. We close. and didn't show any work history, any W-2, any tax return, just put the 30% down. So
you need to give me time to breathe.
yeah. So let's say we have another customer that he bought the house. I'll give you another one that was in Grand Prairie actually yesterday, for $240, and he had like a 518 credit. 518. Yeah, 518 credit.
518.
And so this goes into a no doc asset based. He was self-employed. He owned a trucking business, and he couldn't even show any bank statement or any tax return.
So basically, he's cash based.
Right. Cash based, can't show the money, but he had cash money for the down payment. So he put 25% down, and we got him approved. We closed in 3 weeks.
So basically, this is a what do you call it? No, this is it's almost like you're doing the what do you call it? Those loans that not standard loans for
non-QM.
Non-QM, yes. So this sounds like a non-QM loan, right?
Yeah, non-QM. So is there non-QM mortgages that we make these loans directly? We're the direct lender. This stays on our books. We're on our balance sheet. We make this loan to you. People that they come from another country and they don't have U.S. citizenship.
Okay, so let's talk about that. ITIN number.
The ITN, we do those loans.
ITIN number loans, yes.
The ITIN, so also foreign national. They come from another country. They're just want to buy a house over here, but they have no visa, no permanent resident, no social. We can also give that type of loan.
Now I do have maybe like 4 people off the top of my head of who could potentially then buy from you this year, not from you.
Yeah, it's possible. It's very possible. Now I will tell you. So any of these loans that we're just talking about right now,
down payment. What's about
you
down
have
payment?
to have money. So so now we've completely flipped the script from zero down,
right,
to asset based. And so basically you have to have, because it's really what's happening here is that we're underwriting a loan based on the asset.
Gotcha.
We're not even looking at the person anymore. On these products that I'm talking about right now, FHA, we still have to underwrite you. But these private loans that we've moved to talk about,
the non-QM ones.
Yeah, it's asset based, where you're putting 25, 35% down, and it's a bridge loan where you just need a quick closing, and then later we fix either your immigration status, or later we fix your credit, or later we fix the property, and then you refinance to the bank loan in a couple years.
What can they expect as far as the interest rate?
Yeah, interest rates, they're going to start anywhere on any of these products. They're starting at 4%.
Okay, it's actually fair. It's actually fair.
Yeah. But sometimes it depends on the person and their situation. Sometimes it can be higher, but they start from there and they go up. The big thing, like, to think about it, is sometimes somebody needs to close and they're not really concerned about the rate because they're just using it as a transitioning loan for later. Like I had one guy, I'll give you an example. He was coming from California to buy a house in where was it? Was it Salina? No, Prosper. And he had a huge inheritance. They gave him like $1 million inheritance.
But he had to wait for it.
Well, he got the money, but what happened was his business got a big hit from COVID. And he got really, really delinquent on his mortgage in California and got very behind, almost foreclosure. But then when he applied with us, his business picked up. He had the inheritance money. And so he had
a lot of cash. Okay.
A lot of cash. And he bought a brand new, beautiful home, $500,000 home in Prosper. He put 30% down. He did a 3-year bridge loan with us to purchase the property. We enrolled him in credit repair. And then he did the bridge loan to close because he needed that house right now. He was moving his business from Texas from Florida, or from California to Texas. We closed on the loan, and then he refinanced, boosted his credit score up, and now he got like a 3.5% fixed rate on conventional.
So you're not getting penalized for those short-term mortgages, are you?
No, because there's no penalty. There's no penalty to refinance, but he wanted that house at that time. And so we closed because no lender was going to approve that loan.
Exactly.
Because of the almost being in foreclosure. So I'm just saying that's a strong thing. Now, also I want to go into bank statement loan. If you're self-employed,
Mhm.
You own the business, you're a realtor, you're a lender, you're an entrepreneur. We have a bank statement program to go up to $3 million home with only 10% down. So no tax return.
That's not bad.
Yeah,
10% down,
yeah,
not bad at all.
yeah, just give me
Now,
the
you
last.
and I, okay, you and I are going to run a couple of ads. I have a couple of marketing campaigns that are forming in my head.
Okay.
Okay. Now, let's go back to our 550 FHA loan because that's the majority of people who will be watching. They don't have 10% down or 25%. Let's talk about qualifications. So for that 550 FHA, let's assume that they are looking for 3.5% down, right? What would be the qualifications? ITIN number?
So ITN would not work for this. They have you have for USD or for FHA, you have to be a permanent resident or a U.S. citizen, or you could be H-1B visa, but you have to be here for 2 years and have 2 years of income.
Cool.
Those are the
Good to
requirements.
know. Okay, good to know.
Yeah. So for 3.5% down, we have to boost your credit to 580.
Okay.
Because at 550, you have to put 10% down.
Okay, with 550 FHA loan, you will have to go with 10% down. Plus closing costs and
plus closing costs. So my advice is always let us try to get the score up always first. Because 90% of the time we can get the score up very easily, and you can get a lower interest rate and less money down.
Gotcha.
Okay.
So now walk us through this process. Okay, I am bringing to you a couple. Her credit score is a little bit better. His credit score is a little bit lower, but he brings the money in the family, right? So he's the money maker. She works on a side business. He is W-2, she is 1099. Walk us through the process, and her mid score hypothetically is 592, and his mid score is 553. Walk us through the process. What would happen?
So what would we do in this example? Obviously, we would do an application where you send us your W-2s, the pay stubs, the tax returns. We check the credit. Let's say that we look at the income and you qualify for $350,000. Okay. And so we've pre-qualified you for $350,000, but I say, well, look, with the pre-qualification, we have to do a little bit of credit work. Okay. So I'm going to give the approval to Elena for $350,000. But in the meantime, I have to start working on boosting up your credit. So we have a software where with our credit team, we're going to run you through our software to see what do we have to do to boost you up to 580 or 620. And then there's going to be an action plan that you're given. And that action plan usually has a few steps on it. It could be get this item deleted, settle this account, put this in dispute. You're going to be taking these steps while you're searching for the home. So
which might take, in our current market, might take a couple of months.
It could take a couple of months.
But let's hope not. Let's hope not. Let's not.
Right. So we get you pre-qualified. Your income, everything looks good. We issue the pre-qualification to you, and then you start working on the credit plan. Okay. So usually this credit plan takes about anywhere from a couple weeks to 30 days to get done. And then we notify you as the agent, hey, the credit plan is done. Then you can officially go under contract and then purchase the home.
So before they finish their credit repair, or, at the very least, you feel confident to issue that letter, we should not go under the contract yet, unless we're ready to extend the closing for.
Well, the only way I recommend going under contract with a credit plan is if it's a new construction. So it's a new construction.
That's actually no. That's good. Let's talk about that. Yes,
we do that all the time. So a lot of times right now in DFW, the homes are taking 6 to 10 months to build, and so let's say that I like the file. I'm saying I can see that it's going to qualify, but you just need a little bit of credit work.
Okay, so I have a third marketing campaign ready to go in my head. Go for it.
Okay. So we do this every day for people where, for a lot of veterans and a lot of FHA.
Yes.
Yeah. So we do this. So basically, we see people every single day. They have a very good income. Total household income is 100, 200, 300,000 or whatever. But the credit just needs a little bit of work. So if you want to get pre-approved, we'll pre-approve you for the new construction. and then enroll you in the credit repair. And then while the house is being built, we're fixing the credit, getting everything ready. And then generally the credit is done usually about 2 months prior to the completion of the home. And then we just go to closing. So that's what we do for, I mean, literally thousands of people. You know,
I think it's a perfect solution. The new
it is,
construction.
it is, it really is for a lot of my clients that, you know, they, again, great jobs, you know, low debt
Just
ratio, you know,
just a little bit of issue
yeah, a
still to
little
be
bit of
cleaned
issue on
up.
the credit. And then, because that to me is, you know, and I don't know if you watch any of my videos on my channel, but
Guilty, I have not.
oh, okay. One of my clients, we do a testimony every week where we do a closing and then we do a Zoom. And he said something on the last one last Saturday. He said, "Do not let your credit score judge you.
Mm-hmm.
Do not let it dictate your future."
Mm-hmm.
And if you look at that, that's really a true statement, because a lot of people, they get rejected by the lender because their credit isn't 720.
And they get that rejection up to a face value. They receive that rejection letter from Quicken Loans and they think this is it.
Yeah.
And then they don't want to run their credit again because, oh my God, another credit inquiry.
Yeah. And see, that's the thing. I mean, so, and when he said that to me, because the reason why he told me that on that shooting is I met him 2 years ago, and his credit was like 530.
Mm-hmm.
And he's been searching in his market in Ohio for a home for 2 years. And we just closed on his house last month, and now he has a 690 score. And he closed on his beautiful home with his beautiful wife. And that's the thing. He went from a 530 to 690, and he never gave up. And that was the, you know, the lesson of his story, is that a lot of people, when they get denied, they think that that's it. They can't own a home. They don't deserve it. They have to stay renting. And it's not true. It's not true. If you have a good job, you make money, you pay.
You work at cleaning up whatever issues.
Yeah, and you have to follow the plan. Now, please, guys, what I'm saying is that you have to. So this is not, and I'm just going to be very straight with this. This is not for people that if you don't pay your bills on time, you don't have a job, you don't have income, because the loan does look at the ability to repay. So I want to make sure that this is, you know, this is what I'm talking about, is that if you have a good job, you know, you follow the credit plan, because I want to be clear that not everyone is going to be able to do this. But if I say, okay, you have a, you know, you work for the railroad, you're making good money, or you work for the, you know,
trucking company or
whatever
whatever.
company, yeah, but you have a good job, I can see that you have a little bit of money saved. You don't have to have a lot of money, a little bit of money saved, you know, and you listen to the credit plan, because if you fight the credit plan, it's not going to work. You have to listen and follow the credit plan. Then absolutely, right, it can happen, absolutely. But I want to make sure that we're straight on that, because what I don't want to have people think is that, well, I make $800 a month and I can buy a $400,000 house, because and that's not me. I love everybody, but the lender is not going to approve that. So I want to make sure, because I know people are going to, after they watch this, they're going to say, well,
yes, I have a lot of people who say, I'm currently on Section 8, but I need a 5-bedroom and 6 bath in a Plano school district. Can you approve me?
Right. And it's not me. It's not me. I love to give you a loan for that, but there's no way on this planet that right now the underwriters are going to approve that, because they have requirements. I just want to put that out there, because the people that I've helped to do this, you know, they make 6-figure incomes, you know, but they have a little bit of issues on the credit. It's not a big deal for me. We can figure it out. And, you know, and it's always, you know, I'll tell you, I've been doing this for 20 years, Elena. It's always worked for me. If the person follows the plan, and they always close on the house, you know, and so it's a great thing, because people, you know, they can build their dream home and get out from renting and own their home. So it's a beautiful story.
All righty. Well, thank you so much. Angelo, let's go ahead and put your name and contact information up on the screen again. I'm going to put Angelo's contact information and the link to his portal where you can apply for a loan in the description below. So make sure to open up the description below. This is it for today. This was Elena Garrett. I am a realtor in the Dallas-Fort Worth area of Texas, and I'm with Keller Williams Central. Let me know if you have any other questions outside of financing. Thank you so much, Angelo. That was a pleasure.
Thank you, guys. Take care.